Welcome, and here we're looking at the S&P 500, and there is the possibility of an ABC correction being in place, which would be the A wave to here, the B wave to here, and the C wave to here. The C wave always is in 5 waves. It is a little bit sort of ugly on this situation here where we've got this spike in here. We don't have a nice clean 5 waves down through here, but on the cash market for the DJ and the S&P 500, it is rather smooth and clean, so it can go there. So if that is an A and a B and a C correction, a 5-3-5 structure, then we'll make new highs above here. But I can't confirm this just yet. The move up through here on the futures markets are looking rather positive and hopeful, but on the cash market they're still quite negative looking, so there's still time to go there. If that's the case, we'd be looking for up for 1 here, back for 2 here, and then up for 3 and so forth there. So look, that cannot be confirmed. It's just an option that we need to consider. While the market is under the 1700, we need to consider that that this move down through here is still just, it can be wave 1, this can be wave 2 here. This is not wave 3 here because it's still too small, but in case it would be a wave 1 to here, a wave 2 pulling back up to the 61.8 retracement level from this point through here, which would be in this little area through here. So we could use that trend line through there and the numbers through there. So it really depends on what develops here and how we can sort of read that there. So if we just drill into that a little bit closer through here, this is just the 1 hour chart here, we can see that well, you know, if we're looking at the A wave, the B wave and the C wave here with a question mark there, this move up here, as you can see, looks quite sort of powerful in its own little way, doesn't it? So it's displaying more of an impulse structure, and that's why you know, it can be a wave 1 to here and a wave 2 and further up. We can, at minimum, we can expect 3 waves here as an A, B, C, or an impulse wave. So look, we still don't know, but you know, we're sort of getting a little bit closer, but it does make a nice A and B and C here, but it really needs to get back above the 1700 here, or give us a wave structure here that we can work with. On the 15-minute chart here, this would be well, it can be an ABC or it can be an impulse wave. So breaking it down, the wave 1 to here, the wave 2, 5 waves here for the nice strong 3rd wave that we're looking at, the A, the B and the C here for the 4th, and we should make a new high here for the 5th. Once that's completed, after an impulse wave, we get the counter trend, the ABC, and then the other 5 waves up through here. So you can still see that, you know, our 61.8% comes in around, you know, around where this high is going to be. So look, anyway, it's just a little bit tricky if you're intraday trading, then because we've got these 5 here, that means that we should get another 5, and you can work off the 1690 there. So the classic trading levels pattern, the arrival, the reaction, the support, the first high above the level, then 3 swings, and then tested support over here. You can start moving in over this point here, and that will give you the correct timing to get a little bit higher up. The 1695 is something that you trade to. Then in this little area here, from, you know, the 8 here is a profit taking number, so you sort of start you know, taking profit at that point. The DJ is the same as well. We've got on the 1 hour chart here, the A, the B and the C. It's only an option. It will depend how this moves up through here. Excuse me. And the 15,500 here is the supply level. This is where the resistance is. This is where the orders are sitting. This is what it's retesting here. So once again, we've got exactly the same sort of looking pattern here, which does stem towards an impulse wave to the upside. It would be the 1, the 2, the little 5 waves here for the 3rd wave, the 4th wave pulling back to the 4th wave of 1 lesser degree, and then looking for the 5th wave to make a new high here. Not that it has to make a new high, it only has to count 5 waves here, but this does look like a little wave 4 here, so it'll move up there, then an ABC correction from this point here. the Australian market is looking a bit more sort of bullish. Yesterday we were talking about this particular structure coming down through here being more of an A and a B, and then 5 waves for the C wave here, making the whole thing corrective as an A, B and C. And if that's the case, then we'd be looking for wave 1, wave 2 here, which we've got through here, the 3rd wave up to here, 4th wave here, and the 5th wave here, probably, up here somewhere. So in here you can see you got the little 1 and the 2, the 3, the 4 and the 5. So today we should be getting some type of ABC correction across here, and then moving up in 5 waves from that point there, with this being the wave 1, the wave 2. The wave 3 does look a little bit small, so maybe there's a little sort of one more little high in here, take us a little bit higher first, then that situation there. The support here should be at the 50, the group 2 here, the 65, 72 and the 80. If I got that on a smaller chart, just bear with me a little bit. Okay, what's this? Okay, so yeah, look, there's probably one more little wave up through here that I've missed, because that's obviously the 3rd wave here, little wave 1 and 2 from this point here, which would be looking, yeah, so look, it can probably do this actually, a little thing here, another little move up to here, and maybe even another one up through here. But Tuesday, in the bullish weekly cycle, Tuesday morning can be a bit of profit taking, not normally severe, and normally the trend turns up after that profit taking there as well. So the way to trade this situation, of course, is that buy new highs is one way, so you can go that direction. If it doesn't make a new high above whatever the high is here, then you're looking for something here, but it should stay within group 2 here, the 80 and the 65, and the 72 is the critical point in that there as well. So but yeah, look, starting to impulse sort of nicely up there. The third wave here really needs to be longer than this guy here. So it is at the moment, of course, but no, it's not there just yet. So we can expect higher moves here. So look, buy new highs, and the metals are still trending higher, and we'll look at those in a moment. And the banks are running. CBA's got its dividend tomorrow, so how you want to handle that, it will be ex-div on the open, so just be mindful of that, especially in that daily robo system 1 that we're trading. Right, let's have a look at, just have a look at CBA, because I got it on this template here. So yesterday CBA here held its at 72 here, it held its position, which was great, which makes this move down here in 3 waves, doesn't it, whichever way you look at it. So that would be an ABC correction. This looks like an impulse wave moving up through here, so I think I'll just take it. You could take it from here as wave 1 and wave 2 back to here, but I think taking it from this point here back to this point here and moving higher up through here, it should take this high out here, but this gap would be one point that volume would be sitting at as well. Okay, let's have a look at the commodities. Okay, starting with copper. Copper's in a large rally, and we're in wave C of that rally, and in wave C there will be 5 waves, and we've got the wave 1, the wave 2 here on the daily chart, the wave 3 here. We're looking for the wave 4 to come across the 330 section here, which would be this one here, and then wave 5 to the upside, which should be around the same length as wave 1 there. So that will take us into this 340, 350 area through here. The wave 4 through here can get rather complicated, but it still keeps the market buoyant. So this is the situation here. Not that we need to go back over all of this here, but the wave 1, the wave 2, and we've been tracking this 5 waves up here for wave 5 of 3, and we're looking for wave 4 to come back. Now wave 4 can actually come back to the wave 4 of 1 lesser degree in here, so around the 325 is possible, but I can see that the swings are not increasing in size, they're actually diminishing. So let's just see how this goes, but the norm is that if we're working with the closest largest number, and in this particular case too, the 330, the 3 is the top of group 1. So we can expect a reasonable correction here, but the range of the correction is normally in group 1 here and group 2 below here. So the 8, the 7 and the 65, 72, the 127, 20 there. So yeah, that would be the range of the correction that we're looking at for this. So let's just see how we go with this. But it should stay quite stable, keeping the sectors pretty stable. So this is US BHP here, still pushing higher up through here. It could certainly come back and refold into the 65 here to check it as support, as copper does its thing as well. Yeah, and obviously Australia BHP is moving quite nicely off the 35 now, so the next level will be 38. The halfway mark here, even though it's above that, the 36.50 can be a support or resistance, well, a consolidation area as well. So if that's going to fold back into, well, then you can expect the 36.50 there to be what you're looking at, and the 36 is probably the support there. But that will be, even though it's not there yet, that 36.50 will be the balance line in that little area there. The gold market is moving up nicely in an impulse wave. So there's two ways to count this impulse wave here, which is a 5-wave structure, and both ways are put on the website in the gold section, so you can have a look at that. Another way to view this is that, once again, we're at the top of group 1 here, and we've got the arrival, the reaction, the support, and the first high above the level. So if this is the correct count here, then we would be looking at an A and a B and a C here, coming some sort of structure like this here. We just basically don't want the pivot, the 20, the number 2 there becoming the resistance through here, and then pushing up through here. This would be where the timing would be to get this right after 3 swings across a level, any level, and then finding support on that closest largest number on that retest. On the retest is really important, is what you're looking for. The breakout's important, but the retest is more important, which I did get together on the silver here as a nice classic trading levels pattern on the 5-minute chart here that's occurred in the last couple of sessions. So first of all, a little bit complicated with all this jargon here, but the 2100 here is a minor trading level, and we've had the market, I mean, you can see things in many different ways, of course, and either an Elliott wave, which I've also put through here, or the trading levels pattern, classic pattern as well, which is the arrival, the reaction, which is normally in 3 waves, and finding support. Once that's been done and dusted, then we look for the first high above the level, which normally stays within group 1, the 10, 1, 2 and 3. If it ever found support on top of group 1 there, well, then we would trade long from that support, but tested support at the top of 3, 30 in this particular case, then we'll go long from that point there. So because when a market has a resistance here and it comes back and it goes through all the process of the profit taking, stops being taken out, value buys coming in and so forth, it still takes, in terms of energy, it takes energy to push it up through there, and when that happens quite firmly, then it needs to chill out basically, and then it goes through its larger correction. And then in this case here, quite a nice A and B and C wave here in 5 waves for the C wave here occurring. So a nice A, B, C, and then finding support back up on the level here. That's the perfect timing for getting this. So the move up once again, and then the retest here as well. So I mean, the retest can come below here, but then it's got to climb back up there again. And if it does that, well, then I find normally if it touches just nicely on the level, then it just makes life a little bit sort of easier. So anyway, that's the classic trading levels pattern: the arrival, the reaction, the support, the first high above the level, then the correction in 3 swings. Even if you can't work them out, doesn't matter, you're still looking for that support back up through here. So this is one of four things that can happen at a level, because if this doesn't happen, the next pattern would be this market goes straight up through here as the overshoot pattern, and then it would have its A and B and C back through here and then do the same things there. The overshoot pattern can shoot up and then just come back and sit on it as well. If that's the case, and then move off from that point, then take that as well. That's not as common as the move straight up and then coming back the same distance above will be the same distance below, so to speak. The other two patterns are where it comes up to the level here and fails completely. So that's one. The other one is where it just comes up straight through here, never stops and continues to go up through there. That's why we have a plan not to miss that, and support on top of the group 1 in all cases. It could be micro group 1 or subgroup 1 or minor group 1. That support on that level there needs to be taken at that point. So we know what to do at what particular time. Look, it's not perfect, but it's close enough. Alrighty, the oil market. The oil market, we were looking yesterday at this particular pattern through here on this 2-hour chart here as corrective, as an A wave, a B wave and a C wave. And if that's the case, we'll be seeing a move higher up through here. We do have a nice little impulse wave moving up through here at the moment. This fifth wave here should actually move higher through here. It should be, at least the length of wave 1 here, and not smaller than wave 3 here. So we may just have, just zoom in there, just bear with me for a second. Okay, this will do the trick. So this is what we're looking at the other day. So we've got wave 1 here, wave 2 here, and wave 3 here. So you can see that wave 5 here is a little bit small. So we should be seeing more of that. But at the same time, there's a couple of things here. Is that the 105 is the midpoint, which is the most important number between the 100 and the 110. Right now, once you got to the 105, 108 is the next important, but coming down from that, the 106.50 is the next important from that, and oil seems to play with this number a lot, so it's usable. So if you're looking at this market and you like to go long, then I really suggest that you wait for the 106.50 as a retested support to move in on. If you're really keen, you could move in on the 106 as such. But this move up through here can do a couple of things. This may be just wave 1 and an A and a B and a C for wave 2 here before it goes up for 3, 4 and 5 to finish that, because we're looking for a wave structure, the same as these guys here really, to move up through here. So we need to be a bit mindful. The other thing too is that this does look a little bit impulsive down through here. So we may have an A wave, a B wave and a C wave here before we push off through here as well. So I would wait for a little bit more development before that. But anyway, the main point here is that we're heading up through there. Okay, so soft commodities, corn, as you know, we've been tracking. So we were looking at this little correction through here. We're watching it unfold, and I was a little bit sort of confused about it, but the good thing is that if we'd found a nice solid retest on the 72 number here, then we know that we'd be going higher from there, because we were counting 5 waves down from this wave 4 here in terms of 1, 2 and then 1, 2, 3, 4, 5. So that all fitted quite nicely into here. I just couldn't figure out if the whole 4, or if this little 4 was jammed up in here with this little 5 here. But it doesn't seem to be the case. It seems to be that this is the wave 4 here in terms of the A, the B and the C, and then we're looking for 1, 2, the 3, the 4 and the 5 down to here to find that wave 3 low that we were looking for. And the wave 4 that we're looking for now should pull back to the wave 4 of 1 lesser degree, which is here, or also the 38.2 retracement level, which is also around this 500 here as well. So somewhere up here we're looking for, and we're looking for that in 3 waves. So we're looking for an A and a B and a C wave through here. Once that's finished there, we'll be looking for this to come further to the downside there. So allow that to play. For that to move up there, if you're thinking of trading that long there, you really need to make sure that you've got support on this 72 here, and it's not there yet. So it's got the first high up there. It's probably doing some little corrective pattern here, but eventually you want it sitting firmly on there, and you could take a high here, and you could do the same on the 80 here, where you would add on top of the 80 here, start to build in a position here and up to here. Definitely take 50% profit, at least minimum at 90, and then start looking at 97, 98 in here to get out. So that all depends if the support on this 72 is found. If not, well, then you know that it's going to work lower from that point there. Right, that's that. Let's look at FX, as there's a short trade coming up in the euro. Okay, starting with the US dollar here, you can see that we've got an impulse wave developing from this particular low through here. So this can be the low here of this whole move down, which would also have the euro as a high point now as well. So in looking at this here, we've got the third, so we'll be looking for a little fourth wave in here somewhere, and then a fifth wave up through to here, making a new high, then an A and a B and a C correction through here, and then moving up higher through there. So this trend can stay in place as long as this midpoint here, the pivot within group 1 here, the 10, 20, 30 stays in place. Technically, from an Elliott point of view, it's the top of wave 1 here, but we know that if the pivot ever becomes the resistance, then it's automatically sort of pulled into the 81, if not lower. So we do have the beginnings of a nice impulse wave up here, so that means that we can move up much further as well. So next step is finding support on the 81.30 in a 3-wave swing, and then a high here. This high here can go up into this area through here, so you'll just need to count the little wave structures up through there, but this is what we're looking for here as such. But yeah, look, all positive there. The euro as well. With the euro, we've got the turn in the market as well, but in this particular case here, we've actually got the 5-wave structure down through here, making the wave 1 here. And what we're looking for now, of course, is the A, the B and the C wave moving up into this area through here. This circle here, of course, the lower end is the 50% retracement level from this here, and the top here is the 61.8 there. So that would be our target sort of area there. Now, the euro can have very shallow retracement levels, so obviously we've got wave 1 here, wave 2 here, so we're looking for a nice sort of short trade to come in after recognizing a 3-wave swing here. Once wave 2 is in place, then wave 3 to the downside will be longer than this level here. So we should be able to be looking at 131 down here as a target area through here. So that's what we'll be looking at through there for this move down through here. So the question is getting this right here. Look, one thing here, I guess, if this, if all goes if this low here gets taken out, then you would short from that point there. So that's one point that we need to make. The second point is that we're looking for the 50-60% retracement level into here in three waves here. Bearing that in mind, we know the euro can have shallow retracement levels, so instead of pulling back up 50 and 60, it may just pull back up to the 38. So with that in mind, that's what we're looking at here. So this little structure that's in play here at the moment, this is the low here. And we can see so far that this correction is a little bit small for this whole structure coming down through here. So bearing that in mind. You know, like I mentioned, if this becomes the retested resistance through here, this is a little 5-wave structure coming down through here, so we should see a little counter trend here, and we should see another little 5 waves here. So there can be more to this correction across here as such. But look, what we want to see is we want to see this basically climb up into this little area through here, and this is where we can look for the short trades from. But what we want to see is that instead of shorting it from this point here, bit reluctant, because normally you'd short from the closest largest number and being under that. So a move above here and then coming down and finding this is resistance here would be the way to go. But you can move in a bit early. You don't have to get it right on the top or even higher, whatever. But this pivot, this point here is important. The 2 here, that's in group 1, 10, 20 and 30. So if the market does trade higher here and then comes back down and finds this as resistance here, then that's where you'd trade short from that point there. At least glean a position in here, and then obviously looking to glean more positions once this 133 has become the retested resistance through here. But you need that because this got to be important here. It's important here. This 133 here is the top of group 1, so finding support on here is a positive step. Okay, so you need to be mindful of that. So if it does find support here, and the same with this one as well, on another degree smaller, this is also a group 1 up here, these 3s as well. So finding support here would put the market back up into the 50-60% retracement level up through here. So like I mentioned, we are looking for some sort of A, B and C movement up through here. We just, once that's sort of done, then we just want to try and work out where the best place to be is. And I was looking at this little area through here, but things might not pan out that way, and they may be a little bit different from that. But anyway, look for that. Anyway, check on the charts anyway for the opening tonight. And also look at the DAX as well. You've got the German ZEW figures coming out tonight too, and they're a very important part of the economy in not only Germany but also Europe as well. So a bit of an unknown indicator for a lot of people, but worthwhile getting to know. Alrighty, the Australian dollar. Well, there's some things we do know, some things that we don't know. So one of them is that we understood that coming into the this is all group 1 here, the 1, 2 and 3 here, coming into the pivot through here. We knew that, normally there would be some sort of reaction here, and it could certainly be a high here, as we were looking for. One of our patterns that we were looking for, as you know, is a bit of a triangle pattern with a move up to here and then back to here and then to here and then down from this point through here. While the copper market is still heading to the upside, though, we need to be, and the US, the US dollar is heading up now too, so that can help that push that down. But what I wanted to look at in here, first of all, if this 92 becomes support, then you want to trade long from that point. Okay, so you could treat this like a classic trading levels pattern: the arrival, the reaction, the first high above the level, then the A, the B and the C, and then the support on here. That's how you'd go long here from that point. So you're not missing anything. There's plenty of time to go from this point here. But the pressure's more on the downside here. The downside here is that right, okay, there's a couple. This is interesting because, first of all, we've got a 5-wave structure from this high here: the 1, the 2, the 3, the 4 and the 5. So after 5 waves, we get an impulse wave in 3, get a corrective wave in 3 waves, pulling the 50-60% back up there. Now, because we got 5 waves down here, that means that we'll get another 5, which would be these guys here: the 1, the 2, the 3, the A, the B, the C for the 4th, and down for the 5th here that may or may not be completed. So in one regard, that's as far, because we've got 5 here, we know that we'll get another 5 over here, but that's as far as we can go with that scenario. So what we could have here is an A and a B and a C wave finishing from here, a bullish corrective pattern. So if we do get support back up on the midpoint here, the 91.50, then you'd go long from that point. So if it doesn't find support there, but only trade a small amount, and then you'd be looking for the 72 to become the support there, and then you would trade along from that point there as well, or you trade from here and get out here and then wait for support here, because it is the supply area through there. So there is the possibility that we've got an A and a B and a C here, and if that's the case, then this high will be taken out through here. So you want to try and look to build into the long side over there. If that's not the case and we're going further down with this count, then it would count like this. This would be the wave 1 down to here, this would be the wave 2, and then this would be the wave 1 of the next smallest degree. And then we would be looking for an A and a B and a C here, and then we'd be looking for further downside coming from this area through here. So that midpoint there will be really important. In fact, if you want to be even safer, you wouldn't go long until you're sitting on the 92 there. So yeah, alrighty. Well, that's it. And if it does move down through here as well, normally if it is a more bearish picture where we've got wave 1 down to here and wave 2 coming back to here, and then wave 3 coming, then it would move through these numbers here, group 1, quite slowly. The 10, 20 and 30 would be quite choppy, but because of the larger wave structure here, then it would move down quite swiftly through here. So you could hold it, you're better off holding it short from that once you recognize that. If we get a corrective pattern from here and then find the 50 as the resistance, then it's got much further to come down, sort of a retest of the 90 area. But otherwise, just be mindful that we can have the A, the B and the C in here at the moment, and it can move higher from here. So it will all depend on if we get an impulse wave up here, 5 waves, or we get the 3 waves up there, the A, the B and the C, and then moving down from that point there, and that would be the resistance there. So it probably wouldn't get much further than the beginning of group 2, in this case the 65. Alrighty, well that's it. So good morning and good luck.